What is a capital stack? If you're interested in investing in multifamily real estate, you've probably heard the term before, but what does it mean? In this video, I'm going to walk you through what a capital stack actually is and how it affects you as a real estate investor. So make sure you hit the subscribe button right now so you don't miss more videos about building wealth through multifamily real estate. And if you don't know me, I'm Seth Ferguson, a 12-year real estate veteran, host of a real estate TV show, host of a real estate investing podcast, and the author of the book, Sell for More. So let's get right into it and talk about what a capital stack actually is. And let me draw the stack right here. And a couple of things to keep in mind. Whenever we're talking about a capital stack, you have to remember that it gets paid from the ground up. And that means that because the top of the stack is getting paid last, it has more risk. And then we have less risk at the bottom because they're getting paid out first. And our capital stack is really a representation of the funding needed to complete a real estate deal. So at the bottom we have our senior debt. And this is typically conventional financing, so a mortgage from a lender. Then we have mezzanine debt. And mezzanine debt is a really interesting type of debt where it can actually convert into equity, but we won't go into details with that. Then we have preferred equity. And then we have common equity. With preferred equity, as the name basically says, it gets preference over the common equity, which means typically in a multifamily syndication that the preferred equity must meet certain thresholds in terms of the return they're getting before the common equity can start participating in the profits. This is a great way to make sure interests are aligned in a transaction because the general partners, the co-sponsors, will almost always have common equity, and then the preferred equity will be the limited partners, the passive investors in the deal. So as we said, it gets paid from the bottom up. So if everything goes well and we're selling the property at a profit, well, the senior debt gets paid out, then any mezzanine debt gets paid, then the preferred equity, and then the common equity. So we have less risk down here because they know they're getting paid first, and then we have more risk up here because they're the last on the totem pole. Now, what happens if a deal goes south, if something goes wrong and there's not enough money to go around? Well, this is why this is important to recognize how the capital stack works as a real estate investor. So let's say something really bad happens to the deal and now it's getting sold and there's not enough money to go around. Well, the senior debt gets paid out first because there's less risk, that's why. Then any mezzanine debt gets paid, but what happens if the money runs out? Well, the preferred equity and the common equity, they don't get anything back in that case because the capital stack always gets paid from the bottom up. Let me show you another example of the capital stack without the mezzanine debt. So we may have the senior debt down here, so conventional financing, and maybe for this property we've got a second mortgage. So then we have what's called junior debt in this case. And then there's no mezzanine debt, but maybe we have three classes of shares. So we have maybe preferred equity A, preferred equity B, and then we have our common equity up here. This is very typical these days in multifamily syndications. So in this case, the capital stack always gets paid from the ground up. So again, we have more risk up here at the top because we're getting paid last and less risk at the bottom. So again, in this case, let's say the property is being sold. Well, senior debt gets paid out, then the second mortgage, and then the equity goes all the way up the stacks. As a real estate investor, it's crucial to know how a capital stack works because you have to know where you stand in the totem pole as things get paid out. So if you're interested in learning more about the deals I'm currently doing, head on over to callseth.com and set up a quick 20-minute phone call with me. And if you'd like this video, if you found this useful, hit the like button, leave a comment, let me know what you think, and until next time, happy investing.